To date, we've built our Lativo farm analysis report, and the farm analysis report contains calculated facts, and those calculated facts are defined by these concepts. So we've now extended out our concepts to take into account some extra known facts. The first change is that we now deal with swaps. So we'll deal with swaps where the string reported in this sector is either swaps or swaps with the name of one of the grain types. So if it's swaps with one of the names, the grain types will incorporate in the calculations so that it's embedded with the grain, but otherwise it'll sit separate if we don't know what grain type it is. So now that we've defined swaps as having a relationship to production, so now we'll tag it on to grain production value winter crops. So grain production value for winter crops is now the grain production value winter crop pre-selling costs and share farming adjustments, plus the share farming adjustments, minus the selling costs on the winter crop, plus the swaps. And as I mentioned, if the swaps have a name, wheat or any other crop name which is a recognized name in the string, we'll add it to that specific crop type for reporting purposes. What else have we defined out? So based on what we will be building into the Lativo summary report, we've now got some additional concepts. So primary grain inputs are now our seed, fertilizer, spray and chemicals. We have livestock feed and fodder, which sits separately but also is in the cost of goods section in the taxonomy. We have other inputs on grain farming. So these all coming out of the COGS section in the taxonomy, but we capture anything in the purchases section of the taxonomy, creditor adjustments, factory expenses. Not that we expect any of these, but we simply put these in there because they're in this other COGS section. Definitely the freight and cartage, definitely the human resource cost. I think the human resource cost was the only thing that I'm still not 100% sure on. This is what Andrew suggested. He wanted the human resource costs for the direct or inputs kept separate. So, and that's how it is in the taxonomy. Packaging, selling costs are extracted out anyway, and then anything else that sits in other cost of goods sold, that excludes the machinery and human operator expenses and hire of equipment, both of which are defined separately down here. So we've now figured out that machinery and human operator costs include contract spraying, so that we'll look for strings and other cogs, contract harvesting, contract spreading, and contract windrowing. So that's all per Andrew's description. So we've got depreciation on machinery, which will be all of the depreciation found in the general pool, as well as all of the depreciation found in plant and equipment depreciation. So we'll add those two to get the machinery costs. Machinery costs then become COGS fuel, COGS motor vehicle expenses, because if the machinery equipment has been run as a direct cost by the farmer, we're assuming we'll classify it in here to the farm machinery motor vehicle, hire of equipment, and then the machinery and human operator costs plus the depreciation on machinery. So these two elements defined. Farm overheads then become the total indirect costs per the taxonomy minus the financing costs minus the depreciation on machinery. Operational hectares are total arable and total seeded. Livestock related farm overheads This is simply a way to break these out for the graphs. So livestock related farm overheads, cropping related farm overheads, look at the formulas there, winter cropping related farm overheads, summer cropping related farm overheads. So with these given concepts, we now have the information that we need to produce the farm summary financial report. So we start off with a land summary with total hectares based on seeded cropping, irrigation, fallow and arable, regardless of whether these are owned, share farmed or leased. And then down to grain production. So then we start with our grain production values with the winter crop, and we'll show all the line items but with the specific definition. So no inventories, grain production value summer crop, no inventories, less the primary grain inputs. If you need to see the concepts, go back there. Other inputs on grain farming, if you need to see the concepts again, go back there. Machinery costs, that gives us our gross profit on grain farming. Add or less livestock operating gross profit. So this is calculated by the gross profit on the livestock trading. This will come from the livestock report. Less livestock feed and fodder. And that gives us our gross profit on the livestock operations. So we add those with our contract and hire revenue. And that gives us our gross profit on farming operations. Less farm overheads, defined again, once again, if you need to see it, go to the concepts. Less our finance costs, which we stripped out of there. And then we simply add all other revenue, less any other expenses. Hopefully there shouldn't be too many other expenses. They should all be up there in the farm overheads. That gives us our net profit from operations, and this should equal the profit or loss as per the taxonomy. So how we'll break that out and how you'll actually see it, the breakout pattern will follow the layout here specifically. So we'll make sure that we open up human resource costs so the farmer can actually see the line items that came out of his accountant's financials, and we'll open up anywhere else like other income. We'll open it up so that it's quite clear. Obviously swap profits won't be in there. Once again, opening up human resource costs in the indirect section so that it's all fully visible as to how the final computed net profit from operations will be. Actually, sorry, this shouldn't be this is just net profit, so it'll just be the net profit down there. So hopefully that makes sense. Let me know if there's any changes required.